Good afternoon, everyone. Catherine Cook, founder of The Engine and leading business advisor. It's so good to get feedback from our LinkedIn Live that the topics are on point, thought-provoking, and someone said the other day, a kick up the backside to wake me up. By their own admission, many business owners are asleep at the wheel when it comes to succession planning or exiting. Before they know it, age and time has crept in and they're still at the helm each long day when they really should be enjoying their golden years and the fruits of their labour. Today, I'm joined by two specialists in their trades, Karit Lau, partner Walker Wayland, and Rudy Cox, entrepreneur, franchisor for Coffee News New Zealand, and a successful business broker in Northland for NAI Harcourts. Welcome to our chat about which we can talk about the several meanings of what we're talking about. Hopefully you both know what we're talking about, whether we're selling, moving office, mergers and acquisitions, and many more. How are you guys doing today?
Good, thanks,
Hi, Catherine. Hi, Rudy. All good.
Well, this is going to be an interesting session for you, Karit. You've got the Queen and King of talking with Rudy and I. So
yes, I know. I was thinking, what did I get myself into?
So, look, to be fair to you, Karit, we're going to kick off with you first. Many business owners leave it too late to build value in their business before exiting for a variety of reasons, even though it's a critical aspect of running a successful business. Why do you think this is the case, Karit?
Oh, I must be honest with this one is that it's actually a lack of planning. It's, people actually go into business wanting to get in, passionate about doing what they normally do, but they forget about all the other important parts that surround it. And what happens is that they work in the business, in the later years, they try and work on the business, but they do not actually have a succession plan for themselves, whether it's actually trying to sell to someone in the family, whether it's kids growing up, sell to them, whether it's to a key employee. How do you make it happen? And sometimes it's just one of those things that they don't want to talk about. So they live it right till the end. And the end is too late sometimes because, as I always keep telling my clients, you've got to dress the business up for a sale. And that's where Rudy and I have always had this conversation that it doesn't happen overnight. It's a number of years. So, it does actually take some time to get it to the stage of an exit. So, yeah, good planning is required. And that planning phase, a lot of business owners miss out while they're continuing on their journey of running a business.
Yeah, look, you talk about planning, correct, and many times you and I are always talking about prevention over cure. It's just amazing the conversations that we have, with people that are purchasing a business, and I'm sure you've had this conversation. I always have, asking the potential purchaser what the exit plan is, and they kind of look at me like I'm mad, and I explain to them, well, if you're on a journey with a destination of not knowing where you're going, then you're not going to be able to do the bit in between. So it's really important that exit planning is educated, that it yields potential benefits. It's a real light bulb moment for a lot of people. So, Karit, what conversations do you have with a potential purchaser around exit planning?
Oh, when I'm actually at the other end doing the due diligence for a purchaser, I'm always asking them as to why they're buying the business. What is the key objective? Are they trying to get a lifestyle out of it? Are they very passionate about the industry? Are they actually wanting to buy it for their children, and give it to them later? What is the main motivation? Because that motivation is what dictates as to how they will be able to exit once they have purchased the business. Because once you buy a business, I think we all know that it's quite hard to exit if you don't have a good plan. So and the due diligence and everything that goes from there is all in line with what the potential purchasers' expectations are, and just making sure that those expectations are met when they do go and purchase the business. Because once you're in, well, once you pay the money, it's hard to get out.
Oh, look, absolutely. And I guess when we're talking to people at the time, it's quite an emotional time for them. So it's really important that they're not just thinking about the now, that they're actually like looking ahead in the future, because that really is the exit phase. How long am I in it for? Is it 5, 10 years? Like you said, is it for the children? and so on and so on. And it's really hard for people to be like thinking about that in the moment. Speaking about moment, Rudy, this is your shining moment. Let's start with the many hats you wear. Who is Rudy Cox in the professional world?
Thanks, Catherine. So I have two hats mainly. One is mainly for the master franchisor for Coffee News, which I purchased about 2 years ago, 2.5 years ago. And I guess the hat I'm wearing today is as a business broker. So I sold businesses all over Auckland, Waikato, Northern for the last 10 years. And I bring that franchise expertise into it.
Oh, cool. Well, the three of us, obviously see many business owners procrastinating, which delays the value enhancing strategy to maximize value when it's time to exit. Rudy, how hard is it to have a conversation with a business owner that their value perception is not a reality and they need to build value for the next 1 to 2 or 2 to 3 years to get close to their reality?
It's a very hard one, Catherine. In most cases, they come to us kind of when it's too late and the value is already declining. Then they realize like, oh, darn, I need to sell this business, and what am I going to do? They usually have already an asking price in mind, and then you have to explain to them that actually, well, you might not actually get there, and that's why I actually wrote an ebook for Harcourts, basically outlining, the chapter 1 is don't value your business too high, because you're going to alienate people that really want your business, really like your business, but just based on price, they're just not purchasing it. So it's not like selling residential where they like the white picket fence and they see their kids growing up. It's all about the numbers. That's all they care about.
Yeah, look, there's a lot to take into account, but and it's a bit more of a longer process. Like you said, falling in love with it, but then actually understanding whether it's going to realise the return of my time and money that I'm putting into it.
Absolutely.
Correct. You're often involved in the valuing of businesses and staying in the conversation of building value and worth. How do you manage those tough conversations around business owners who overestimate the value of their business, which is what Rudy's just been talking about, or can quickly increase the value when it's time to sell?
That conversation is a very hard one to have with the business owner. It's like people are having their own homes, and they always think that their homes are castles and it should be worth like a castle. But sometimes reality does not reflect that. It's the same thing with businesses as well. Every single business owner thinks that they've built up a business, we've just got a value attached to it, and sometimes that value is not, what I would call the market value. And the market then comes up and gives the business owner another value altogether. And at that point in time, the business owner is saying that, no, I actually think that it's worth more. But they haven't spent the time to create that value in the business. They have continued doing what they've been doing for the last so many odd years whilst they've been running the business. And then all of a sudden, when they feel that, hey, it's time to sell, or things have become too hard, like COVID came around and people have been exhausted and said, hey, I want to sell. It's technically not the right time to sell it, because you can't sell your business just on 1 year's profits, as what Rudy would know as well. People look at the trading, look at the future, say what sort of pipelines do you have, etc. So selling a business is actually quite a bit of an exercise for a business owner, and they need to be mentally prepared as well. So trying to actually fit that value proposition for them to say what your business is worth versus what it's actually worth. It's quite a tough conversation. I'm having that conversation with one of my clients at the moment, and I just had a call from a business broker a couple of hours ago on that client to say, hey, that meeting went really well, but I don't think your client's going to get the value that he's looking for. He possibly needs to trade for another year, and and that's reality.
Look, it is reality, and I like how you talk about getting mentally prepared, because, like we talk about the high stresses in life of buying a house and getting divorced as being high stresses, but, actually being in the motion of moving your business on when you can't talk to anyone about it because you can't tell your employers and you can't tell your clients because it's all sort of happening in the background, and you've got to do business as usual as normal. It can be very, very challenging. So Rudy, back to you. Many businesses underestimate the complexity of the process of preparing a business for sale or transition. They may not fully grasp the time and resources to improve the operational efficiency or the financial performance or even the market positioning. How far out should business owners be looking to improve business performance before they engage with a broker?
Yeah, first of all, Catherine, and I think Kieran would agree with this point that I want to make, the last one. You buy a business with selling in mind. So when you buy a business, you already think about selling and seeing how you can exit that. And if you don't see yourself adding that value and you think you can't grow the business, do not buy the business. That's just rule number one. No matter how good that business is. But a general rule of thumb, you'd probably start engaging the right people, your accountant first of all, about 12 months prior to selling, at least, just so you can start planning all the personal expenses, and he will guide you through like how to make the books the best possible to maximize the value. To be honest, I prepare business for appraisals on an annual basis for some businesses. They come to me every year and we just do an appraisal to see where they are. It becomes almost like a roadmap. So if you've got a roadmap and you get different points in time, where you're going, then you know where the end goal is or where you have to be anyway. You must be very unlucky with market forces if then you'll get a surprise, for example, COVID, that really negatively impacts on the final outcome.
Yeah, look, it's interesting you talk about businesses and looking at the books from the accountancy point of view, and that's really, really important. I guess for me, being a leading business advisor, it's so important to also have someone working holistically across your building, across your business and building that value proposition. Obviously, as you're trying to attract people into the business, you've got to get your market positioning right. You've got to understand where the disconnects are. You're handing over a business to someone in a certain shape or form. You've got to make sure you actually understand that it's actually all working. So, correct. What are your thoughts around time frame to putting a business on the market? And again, just staying in the vein of who should a business owner be working with to assist with building that value proposition?
Yeah, Catherine, I think the most important thing on timeframes is the business owner being mentally prepared for a sale. So if he's actually thinking that he's going to be able to sell tomorrow, the answer would be that he wouldn't get the best value for his business. So for him, he needs to be completely open to the discussions with the accountants, the lawyers, the business brokers, and depending on different areas of their business, they would need to get it tidied up. For example, if you were a manufacturing business, have you got all your health and safety manuals done? Have you actually got your HR things all tidied up with your staff members, employment contracts, etc.? Are you completely up to date with everything to do with your leases on the building, etc.? Do you have a lease that on the building that you could sell, or have you spoken to the landlord? There's a whole range of things that one needs to actually consider before putting the business up for sale. So talking to the accountants, and the business brokers, all very important just to assess the value. And as what Rudy said, it forms a roadmap for you to say where you're going to be going, what are you going to be doing, and how much do you eventually want, because that would, you start working on that model to say, this is what I want and what do I need to do in order to get that money. And if it means that you're going to increase the level of earnings or the profitability, what are these sort of expenses that you can actually pull out of the business, not be put into the business, etc., that is going to help what they call the EBITDA number, the earnings before interest, tax, depreciation and amortization, as to what are those things that we can actually pull back to then give a good result for the business. Because generally, you could be talking about this process, it could be 2 to 3 years before you put your business up on the market to get the best value that you want.
Yeah. Look, you're absolutely right. And the timelines need to be realistic depending on where that business is at, and also, like you said, around being mentally prepared. Even if the business is ready, are you in the right state of mind? There could be other triggers that are impacting you and could cause even further stress if things don't go how you've anticipated that they will go from a selling point of view. Look, we've all heard the saying, most businesses don't plan to fail, they fail to plan. And, I guess what I see out there is business owners prioritising the short-term profits over long-term value creation. For me, the approach needs to be business as usual, as well as developing strategic initiative to increase the business worth. So while you put in, getting the books ready and valuing it and yourself, Rudy, you're looking at the potential of what you can yield for the business. If you really want to build strategy, you need to engage someone experienced to build this with you and hold you and others in the company to account around the implementation of these strategic initiatives. What kind of strategic initiatives build value in your mind, correct?
Yeah, as I've said before, when you're trying to sell a business, it's all about trying to get all the items in your house under order, which goes everything from your books, your accounts, making sure that it's getting done properly, completely verified, and proper quality controls being put against that. You look at your systems, your processes. Have you got the right accounting system? Have you got a right job costing system? What confidence can a buyer actually have if they're selling widgets? The value of the widget that has been put in there. What is the what are the things that we can actually pull out of the business that is personally put in through the business, because people try and flush as many things in their businesses, which is of a personal nature, and then they expect the accountant to be the creative one to make it tax deductible, etc. But whilst they're doing that and they're trying to get more tax deductions, they actually forget that the lesser they actually show as their earnings, the lesser they will actually receive as the value of the business when they sell. So, it's actually quite a hard value proposition one needs to then put across to them to say that, hey, yes, you're saving for tax, but imagine what you could get for your business if you didn't actually push all these expenses through the business. Because the accountants are not auditors, they're not actually picking on every single transaction that goes through a company set of books. And for the company directors to make a call, they're trying their luck, and secondly is that they're not actually helping themselves when they get to sell the business. So so it's quite important that getting alongside with your accountant, your lawyer, your business broker, business advisors, etc., and try and build a value proposition to get to the best outcome that you can get for the value that you can actually eventually end up with, because you need to know exactly what the value should be so you can retire. Because some businesses actually sell, but they've just paid the loans off and they don't have anything to themselves. And they say, oh, I can't actually do this. And then they out there, it's almost like what Rudy and I know, we like pumping gas at the service station after that.
Yeah, look, it's definitely something to consider. And we're going to dive more into, obviously having a look at your personal life after selling a business, because it's so important that you need to know how you're going to support that lifestyle. So, building a strong value proposition, as you were just talking about, correct, for your business will indeed yield more financial return for many reasons. I've been talking about this quite a lot lately around innovation. And innovation and growth will lead to opportunity and diversification. It'll give you competitive advantage that sets you apart from other competitors. What other value propositions are there, Rudy, from your perspective?
Well, I really find like many businesses are still invisible, Catherine. So sales and marketing is definitely one that needs to be addressed. So I'm not pushing my own agenda here, promise, with the coffee news. But many businesses are still invisible. They're relying on organic SEO.
If I could just interrupt, Rudy, you can talk about whatever you want. I mean,
I know, but I don't push the agenda. I just say like coffee news is great.
You can have whatever you want in here.
Yeah,
that was a spoiler.
Yeah.
Well, we're just going to cross over for an advert now.
No, but it is that way where businesses really still rely on organic SEO rather than paid SEO, on free social media, email sales letters. Inboxes are full every day with email sales letters. A business buyer wants to see a clear marketing strategy. I mean, if I can't find them, how can your purchasers find them? So it's actually an opportunity for a purchaser to value add that into a business, but will mark down the price for a seller. So it's I think it's an important one personally.
Oh, look, Rudy, I absolutely 150% agree with you. I mean, look, financials are important, but before you even get to your accountant to start valuing your business, get visible. You know, if you want people to know who you are, you want that law of attraction, you've got to be visible, and it means putting your business out there. So, Rudy, let's get straight to the chase. How's the business brokering market now? Is it a buyer's market? Lots of stock?
There is good business coming to market, but up north, particularly, we had a really rough ride. So while hospitality, as always, kept selling because there was a lot of people that actually liked the idea of the lifestyle. I'm going to work less hours. I'm going to earn more money. Not, but you know, those businesses were still selling. But there wasn't much activity in the high end, like a few exceptions. But in the engineering space or anything, I had one engineering business on the market for about like 5-6 months now. I had 3 inquiries and all actually really average ones. Personally, I sold 10 franchises for Coffee News in the past 12 months. That's real positive on a personal level. But business sales, today I got a contract, funny enough, to go back to the last point with marketing. For 6 months, we had it on the market as a secret. And there was lots of inquiries, but it was a mismatch with the inquirer. Now for a week we were on the market and we advertised the name of the business and the profit of the business, and we had an offer within a week. So you just don't know.
Yeah, look, I'm glad that you mentioned Coffee News, because you know that I have our passion for Coffee News. It gets people to put down their phone and actually read something. It gets the brain thinking without all these lights coming at you. But also it gets people out and about, because Coffee News can only be found in places where you're going to have interaction with people. So sure, you can do a lot of online marketing, but Coffee News has to be one of the most affordable and effective and cheapest advertising tools that you'll find in terms of measuring it. The whole brand repetition and being out amongst over 100 outlets in an area every week is just a no-brainer. So Rudy, well done you, and the people that are certainly getting on board. They must be great people, right? But we'll come back to that later. Rudy, how important is market timing? Is this even at play, as we know conditions change rapidly and are unpredictable?
Well, timing is everything. What I found in the last sort of 18 months, having that rough ride, with not much activity, we could have put on the market like the best businesses, and still we wouldn't have any inquiries. I was talking to brokers in Auckland, and they basically said it's happening everywhere in the country, that some business sales and some decent businesses, but they also struggle to get any attention up north. But then you had that business that I just mentioned. For 6 months we were trying to sell a secret, which is really hard. Got a mismatch of buyers, and then you put it on the market, and there was one person literally that was waiting for that kind of business. They were already cashed up because they were hanging in for a good business that would come to market. We go to market, and within 7 days, and then it becomes really like a first offer is usually the best offer. Don't hang out for a better offer because you're only in the market for a week. There are people that are looking for specific businesses that have a real emotional connection, and this was a kind of business. So you never know the timing, but timing is everything, even though you don't know the timing, if that makes sense even.
Oh, look, absolutely. And just talking about a massive pitfall that I see, that I know both of you guys see happen in businesses trying to sell, is they're not prepared with the information for due diligence. I mean, Karit and Rudy, I'll start with you, Karit, how do we get businesses to understand that even if you've got a broker engaged, you've still got to be committed to this process, and you've got to have all the information, because the brokers, they don't have everything, and there's going to be things that are going to be asked. So getting fully prepared, you mean you've got to be putting yourself in the shoes of the buyer, right?
Very much so, very much so. So a lot of business owners don't like this process of selling the business. because they could actually go through this whole process, go through a due diligence. They'll get asked so many hard questions about their business, whilst the purchaser is trying to verify everything that they've been told about the business. And it's exhausting. And when it comes to the end and say they may have a three-week due diligence period as part of their sale and purchase agreement, the purchaser could come back and say no, that no, it doesn't actually feel right or doesn't fit in with me, etc. And they have spent 3 weeks of their lives trying to make sure that they can do everything to keep the purchaser happy, which means a complete distraction from their business. So they're not really doing what they should be doing at that point in time. But the biggest thing with all of this is that they haven't planned well for the due diligence, and that's why they actually feel the burden. If you have planned yourself well for the due diligence and have got all of the required documentation that you need all up front, and have the information all up front, and that comes back down to having an experienced professional next to you to know what sort of questions you would get during a due diligence phase, then the process could be a lot more easier and lighter on the business owner, that they could then go in and have the right expectations coming out from the sale. But without that piece, due diligence is actually quite a hard process for a business owner, because they're not used to that sort of same criticism about their businesses as what they would have otherwise had in their whole life as a business owner. Would you agree with me, Rudy?
Yeah, absolutely. Yeah, it's critical.
Yeah, look, it's an interesting conversation, and it does require time. So if you don't have the time, get the right people around you. We're going to move a bit more quicker into some of these other questions. So obviously we've covered it off before around, you just talked about correct people not receiving what they thought they'd get for their business, and therefore have no change left over to live that golden year lifestyle they'd planned. Obviously, you know, the most critical thing is work with your accountant, work with your business advisor, get a personal cash flow, and put your expenses in, and really look at what that looks like, what you need to live off, what you need to be able to live. Correct, that's what you do with your clients in terms of life after selling?
Oh, very much so. Even if before they actually go to the sale, they've got to actually tell me how they're going to live after they've sold. So that's probably the first difficult question that they will get in their due diligence, or before their due diligence, is to say, tell me what you're actually planning, what are you wanting to do, how you're going to actually live your life. Have you got enough money to then put into an investment which is going to give you some passive income? What is the main motivation behind the sale? And is the sale going to really get you happiness at the end? Because a lot of people don't actually go through that hard question at the stage. They just say that I'm going to sell. And then they find themselves into all sorts of problems, because one, they probably are not used to anything else except for their business. They don't have a hobby. They don't have anything else to go to. They don't look forward to the day. And I've known people who've actually sold their businesses, and within a couple of years are no more in this world, because the business was their life. So even if they got all the money that they wanted from a sale, they need to actually be thinking about their afterlife out of the business well before they actually get to the stage of dressing up their business for a sale.
Absolutely, yeah. You've got the financial aspect, but then you've got the physical aspect. You know, what keeps a lot of people alive is their passion in the morning, getting out. You know, obviously we've talked about moving a business on from a selling perspective, but then there's also location. And I know I've done it many times when I had businesses with warehouses and growth, and it meant bigger warehouses. And we know real estate value is determined by location. Is that the same case for business, Rudy?
Yeah, real estate value, but also the lease value as well. But you know, it strongly depends on the type of business. So a business depending on foot traffic needs to be proven to be in a great location to sell for top dollar, probably 18 to 24 months at least. A new buyer will be looking for that. For a manufacturing business, it makes sense to move into a cheaper building before you sell up. So if you've got a really massive building and you want to move on, but the lease is sort of like way up, like market value, but but high, and you can go smaller. Go smaller. You know, like it's you need to take into account the cost of moving, and the expenditure, obviously, because it's going to cost money. But sometimes it's actually easier to find a buyer if the lease actually stacks up a bit more. But it would make sense for and more attractive for a purchaser long term if that lease is more favorable.
Yeah, absolutely. And, you know, quite often not, when you're actually sitting down and reviewing a lot of these things, you actually realise that the market's changed considerably, that there is an opportunity in what you thought was something that was really roadblocking and hamstringing you. So do get those leases down and do look around at what's available. I'm not going to touch on the subject of succession planning with family because I think we've covered that off a lot over the last few sessions, but you know, obviously coming back to that whole planning piece, it's really so critical. And I've got 5 factors that I get business owners to take proactive steps on. The first one is start early. Plan as early as you purchase, or at least well in advance, implement value enhancing strategies. Number 2, seek expert advice. You know, the Engine, Walker Wayland and Rudy have considerable experience in succession planning and building the value proposition for exit planning. 3, set goals. Make sure you know what the goals are and the objectives are earlier on, and you want to preserve your legacy and ensure that your business continues to thrive under new ownership. I mean, that's so important. 4, focus on the value drivers. And 5, regularly assess the progress. And I call that accountability. And have someone like myself or Corit working with you to make sure that you're achieving what you need to achieve. We're going to wrap this up. Corit, what other things do you encourage people to do in terms of exit planning?
One other main one that I try and encourage a lot of the business owners to do is to extract themselves out of the business in the time that you want to sell, so that the more the business is dependent on the business owner, the lesser the value of the business. So if it means that you've got to get a general manager or some like a CEO type of person coming in and running your business so that you are not over there as being the face of the business, that's actually very important, because the person next coming in wants to be completely reliant on the income stream. And that income stream of the business cannot actually be the business owner. It has to be the business. So extracting the business owner out of the business is my key tip, I would say, that one needs to do before they sell.
That's a really good point, Corit. And you know, there's one way you can do that before you're even thinking of selling it, and just test it through your business continuity planning. So, Rudy, what about you? One last bit from you around any tips that you might want to share?
There's nothing much to add. I just want to stress that, you know, just be realistic with your asking price. Don't go too high and alienate those great buyers that are out there actually looking for a business like yours, and put yourself in the purchaser's shoe. Like, you know, listen to their concern, listen to the feedback. You know, why is there pushback on the price? Why is there pushback on lease or whatever it might be? Build bridges to come to an outcome. And there is more ways than one to stack a deal together.
Absolutely. Well, guys, we're out of time, and it's been great having you on here today. We had a lot more to cover off, so I think we'll look at doing a session around some case studies. What do you think?
Sounds like a plan.
That's good. Yeah, that's cool.
Awesome. That means we might get Rudy talking a bit more. Corit, what do you think about that?
I'm happy for that. He's done a fantastic job of being very much disciplined today. Yeah, exactly.
And we'll learn a bit more about coffee news and franchising. I'm next talking about, are you listening to your customers? It's something that's so important. Without customers, you don't have a business. So now's the time to get out amongst it and be absolutely knowing where your customers are at, just in case their businesses are changing. So thanks again, Corit and Rudy, and I look forward to catching up with you both on another session and diving into case studies. And for everybody else, we'll see you on the next session of Are You Listening to Your Customers?